Welcome back to Investing Talk podcast. Today, we're taking a closer look at Celsius Holdings using the material you provided. Our mission is to unpack its recent performance, its place in the market, and the key things influencing the company right now. We'll pull out the most important nuggets from the reports you shared. And hey, if you find this useful, please do subscribe, like the video, leave a comment. It really helps. And if you feel like supporting what we do, maybe consider buying us a coffee. The link's down in the show notes. Okay, let's get into it. Starting with the recent financial picture.
Okay, so looking at the first quarter of 2025, these results came out May 6th. And comparing them back to Q1 2024, well, the material shows quite a shift, especially considering the really fast growth they'd seen for the last few years. This is different.
A definite shift. Total revenue for Q1 this year, $329.3 million. That's actually down 7% from the $355.7 million they did the year before. And what really stands out is the regional breakdown. North America revenue took a steeper hit, didn't it?
It did, down 10%. Came in at $306.5 million.
10% in their main market.
But here's the interesting part. While North America softened, the international side really picked up steam. International revenue jumped significantly, up 41%. Hitting $22.8 million.
Wow, 41%. So a very different story playing out overseas compared to at home.
Exactly. It shows performance isn't, uniform across the board.
And that overall revenue dip, well, it seems to have trickled down to the bottom line, too, that earnings per share figures.
Right. Diluted EPS for Q1 2025 was reported at $7.15. That's a pretty sharp drop, 44% lower than the $1.27 from Q1 2024.
44%. And even the adjusted number.
Even on an adjusted basis, diluted EPS was $0.18, still down 33% from that same $0.27 figure a year ago.
So pressure on both revenue and earnings in Q1.
Definitely. But there's a counterpoint on the profitability side. The gross margin actually improved.
Oh, okay. How much?
It rose to 52.3%. That's an increase of 110 basis points, so just over 1 percentage point higher.
So even with lower sales, they managed costs better, it seems.
It suggests better operational efficiency, perhaps in production or cost of goods. That's a positive sign from an operational perspective, even, it's the lower sales volume.
That margin improvement is definitely a bright spot, then, in what looks like a challenging quarter, otherwise based on this material. Now, the reports mention other metrics people often look at: PE, debt to equity, cash flow, beta, but they don't give specific numbers for Q1.
Correct. They mention you typically find those details in official SEC filings or on financial data platforms if you wanted to dig deeper yourself.
Got it. And no mention of dividends in the material, which usually suggests the company isn't paying one currently.
That seems to be the case, yes.
Okay, so that's the Q1 snapshot. Let's zoom out a bit. What is Celsius Holdings fundamentally, and where does it sit in the bigger market picture, according to these reports?
Well, Celsius is described as a global beverage company. The core focus is on what they call functional lifestyle energy drinks. The main angle is positioning these as healthier alternatives. Think less sugar, maybe added functional ingredients. Celsius is their big one, the flagship zero sugar product.
Right, the better-for-you energy drink space. And what advantages does the material say they have?
Strong brand recognition is highlighted. That's huge in beverages, both for Celsius itself and, as we'll discuss, potentially Alani Nu now too. And that focus on functional drinks really taps into the broader health and wellness trend. That's a big tailwind for consumer interest.
Makes sense. And their market share in the U.S., the reports give a number for that, right?
They do. Around 16 to 17% dollar share on a pro forma basis in Q1 2025.
16 to 17%. So that makes them a pretty major player, like number 2 or 3.
That's how the material positions them, yes. A solid #2 or #3 in the U.S. energy drink category, right behind the real giants.
Speaking of giants, Monster and Red Bull dominate, don't they?
Oh, absolutely. The material points that out clearly. Monster Energy has massive global scale, huge distribution, probably around 40–45% share globally or in key markets. And then Red Bull, iconic branding, also global, maybe 30–35% share. The competition is incredibly intense.
So how does Celsius carve out its space against those two?
Primarily through that differentiation we mentioned, the better-for-you formulations, targeting consumers perhaps looking for something different than the traditional high-sugar energy drinks.
It's definitely a crowded space, and in markets like this, companies often make big strategic moves. The material highlights one very recent, very significant event.
Yes, the acquisition of Alani Nutrition. That deal closed on April 1st, 2025, so very fresh.
Alani News. I've seen that brand around. What's the significance of bringing them in?
Well, the material presents it as adding a second billion-dollar brand to their portfolio. So that's a small tuck-in acquisition.
A second billion-dollar brand. Okay, so this adds scale immediately.
It does. And it also expands their product lineup significantly. Alani Nu, for example, has a particular focus on women's health and wellness.
Ah, so it diversifies their customer base, too.
Precisely. Broadens their appeal, brings in potentially different demographics, and reduces reliance on just the core Celsius brand and its traditional segments. It diversifies revenue streams.
Interesting move. Are there other upcoming things noted? Conferences, reports?
Yes, the material mentions Celsius is scheduled for some investor conferences in mid-June, June 17th, 18th. And the next quarterly earnings report for Q2 would typically be expected around late July or August.
Okay. And there was something about a call related to the acquisition.
Right. A specific conference call was noted for May 28th, mainly to address modeling questions from analysts following the Alani Nu acquisition. It shows how important understanding that integration is right now.
Understandable. And that integration plus the Q1 results we talked about, that all feeds into the company's risks and the stock's recent performance, doesn't it?
Directly. You saw the market react almost immediately to those Q1 numbers.
Yeah, the material said the shares fell after the May 6th earnings release because they missed expectations on revenue and EPS, down over 4% in pre-market trading that day.
And that drop wasn't really in isolation. The material points to pretty significant swings in the stock price over the last 6 months. And looking back over the past year, there's been a substantial decline, mentioned roughly 56.7% down.
Wow, over 50% decline in a year. That's volatile.
Extremely. The material links this to a reported beta of 1.63. Beta measures volatility relative to the market, and anything significantly over 1, like 1.63, indicates much higher volatility than the overall market during that period.
So a stock that's been bouncing around a lot and then takes another hit on disappointing earnings, what are the core risks the material flags that might be driving this or could impact them going forward?
Well, the number one risk highlighted seems to be that ongoing softness in North American demand. That 10% revenue drop is a big red flag.
The core market weakness.
Right. Then there are the integration risks associated with Alani Nu. Merging two large businesses smoothly, capturing synergies, aligning cultures. It's always challenging.
True, acquisitions aren't guaranteed wins.
No. Then there's potential regulatory scrutiny, could be related to ingredients in functional drinks or marketing claims. That's always a background risk in this sector.
Anything else?
General macroeconomic factors are also listed. Things like supply chain issues popping up again, or inflation potentially making consumers cut back on premium beverages like Celsius might be perceived.
Okay, that's a fair list of potential headwinds.
Yeah.
So pulling it all together, the numbers, the strategy, the risks, what's the overall assessment? How does the material frame the current situation and sentiment?
It tries to present a balanced picture, really. It acknowledges the definite strengths alongside these pretty significant weaknesses.
Okay, let's tick off the strengths first. What does the material highlight?
The improved gross margin, hitting 52.3%, is definitely noted as a positive operational point. The strong international growth, that 41% jump, is another clear plus. And strategically, the acquisition of Alani Nu, adding that second major brand, is viewed positively for long-term potential.
And market share, despite the sales dip.
Yes, despite the Q1 revenue decline, they still gained market share in the U.S., reaching that pro forma 16-17% figure. Maintaining or growing share in a tough quarter is a strength.
Okay, those are solid points. But then the red flags, they seem pretty stark too.
They are. The material doesn't shy away from them. Those big year-over-year drops in Q1, total revenue down 7%, North America down 10%, net income down 43%, diluted EPS down 44%. Those are tough numbers.
Hard to ignore.
Absolutely. Plus, the high stock volatility and that really sharp share price decline over the past year, those are flagged as signs of investor concern or caution.
And just the core issue of declining domestic sales. For their biggest market to be shrinking, that has to be a major worry.
It's presented as a key concern, yes.
So what's the feeling, though? What's the market sentiment described?
Well, immediately after the Q1 report, the sentiment was clearly one of disappointment among investors. The stock reaction showed that. Looking broader, the material mentions analyst ratings are kind of mixed. They see the potential, the market share gains, the long-term story with new products and Alani Nu.
But they also see the short-term performance pressure.
Exactly. They're weighing those two sides.
What about, say, social media chatter? Does the material touch on that?
It does, briefly. Mentioned seeing a similar split online platforms like X or Reddit, showing some optimism about innovation or international growth,
Hmm.
but also plenty of concern about the slowing U.S. sales, the intense competition, or maybe execution risks with the Ilani new integration.
And the material rightly adds a note of caution about treating social media buzz as verified fact, right?
Yes, it makes that important point. Always verify information you see there.
Okay. So, considering all these pieces, the good, the bad, the uncertain, the material, boils it down to an overall assessment or a recommendation.
Yes. Based on everything discussed, the material lands on a summary recommendation.
And that recommendation is
Hold.
hold. Okay, what's the reasoning given for landing on hold rather than, say, buy or sell?
The rationale explained is that hold tries to balance everything we've just talked about. It acknowledges the strengths, the margin improvement, the international growth, the strategic acquisition, the market share, but weighs them against those very real headwinds and uncertainties.
Yeah.
The domestic sales slump, the falling earnings, the stock's volatility, and that clear investor reaction post Q1.
So it's basically saying there's potential, but also significant near-term risk.
Pretty much. The report suggests the long-term potential really hinges on stabilizing North America and successfully leveraging Alani Nu, both at home and abroad. But because there's considerable uncertainty around achieving that in the near term, a cautious stance, hold, seems more appropriate than aggressive buying right now, according to this analysis.
That makes sense, laying out the balance like that. Okay, we've covered a lot of ground here. The recent financials, the Alani Nu acquisition, market position, the risks, the overall sentiment around Celsius Holdings, all drawn from the material you provided. Hopefully, walking through all this has given you a clearer view of the complexities and also the opportunities facing the company right now.
It's certainly a company at an interesting crossroads. Strong points in some areas, but uh, facing some real challenges in others.
Definitely. So, thinking about that hold recommendation and all those conflicting signals, what single factor do you think is the most critical one for Celsius Holdings to either fix or really capitalize on in the next few months to influence where things go from here? Something for you to think about as you digest all this information yourself.